Welcome back to Algobot, the channel where we break down automated trading strategies for MetaTrader 5, one line of code at a time. I'm your host, and today we're exploring an expert advisor called RSI Midline Trend Continuation. This strategy blends two familiar tools, the exponential moving average and the relative strength index, into a single trend-following approach. Over the next few minutes, you'll learn how it defines a trend, how it waits for a shallow momentum pullback, and how it manages risk once a position is open. Everything here is for education only, so let's dig in and see how it works. So what exactly does this expert advisor do? RSI Midline Trend Continuation is a trend-following strategy for MetaTrader 5. Rather than trying to catch tops and bottoms, it aims to join a trend that is already underway and to place its entry during a brief pause in that trend. It can be applied to whatever symbol and time frame you attach it to in the tester, because every decision is made on closed bars of the chart's own time frame. The logic doesn't change from one market to the next. Two ideas work together here. The first is trend direction, measured with a pair of exponential moving averages, a faster 21-period line and a slower 50-period line, combined with the direction the slower line is sloping. The second is momentum, measured with the relative strength index and its 50 midline. Most traders know RSI for its overbought and oversold extremes, but this strategy uses it differently. It treats the 50 line as the border between bullish and bearish momentum, and it looks for momentum easing back and then resuming in the direction of the established trend. Around that course, it's a full risk framework. Stops are placed using the average true range, so they adapt to how volatile the market currently is. Targets are set as a fixed multiple of that risk. Position size is calculated from a percentage of account balance. The EA holds only one position at a time, and it shifts the stop to break even once a trade is comfortably ahead. Who is this style suited to? Educationally speaking, it will interest traders who prefer following trends over predicting reversals, and who like clearly defined, rule-based entries and exits. As always, this is background information for learning, not a recommendation to trade. Let's walk through the mechanics step by step. Everything the EA does happens on closed bars, so it never reacts to a half-formed candle. It waits for each bar to finish and then makes one clean decision. The first job is to read the trend. The strategy compares the fast EMA with the slow EMA and also checks the slope of the slow line over the last several bars, set by the slope lookback parameter. When the fast EMA is above the slow EMA and the slow EMA is rising, the strategy considers the trend to be up. When the fast EMA is below the slow EMA and the slow line is falling, the trend is considered down. If neither is clearly true, the EA simply stands aside. With the trend established, the strategy watches the relative strength index for a specific handoff around its 50 midline. In an uptrend, it wants to see RSI dip below 50 on one bar, a shallow pullback where momentum cools, and then close back at or above 50 on the next bar. That reclaim of the midline is the long entry signal. In a downtrend, the mirror applies. RSI rises above 50 and then closes back at or below it, and that is the short signal. Crucially, entries are only taken in the direction of the trend, so the EA is never fighting the larger move. When a signal appears and no position is open, the EA places a market order. The stop-loss distance is the average true range multiplied by the stop multiplier, with a safeguard that keeps the stop no tighter than the broker's minimum stop level plus the spread. The take profit is that stop distance multiplied by the reward ratio, which defaults to 1.8, so the intended reward is set larger than the risk being taken. Position size is then calculated from the risk percent input. The EA works out how many lots would lose roughly that percentage of the account balance if the stop were reached, and it rounds down to a valid lot size for the symbol. Only one position is held at a time. Finally, trade management. Once price has moved one full unit of risk, 1R, in the trade's favor, the strategy pulls the stop up to the entry price. From that point, the initial risk is removed, and the trade runs with its stop at break even while the target stays in place. Simple, rule-based, and the same in both directions. Let's read the core of the meta-editor code on screen. At the top are the input parameters you can adjust in the strategy tester. FastEma and SlowEma set the two moving average lengths that define the trend. RSIPeriod controls the relative strength index, and slope lookback decides how many bars back the EA looks to judge whether the slow EMA is rising or falling. AtrPeriod feeds the volatility-based stop. AtrStopMult scales that stop. Reward ratio sets how far the target sits relative to the risk, and risk percent controls how much of the balance is risked per trade. Below the inputs are the two signals, both evaluated on the just closed bar. Trend up is true when the fast EMA is above the slow EMA and the slope is positive. Trend down is the mirror image. The long signal combines an uptrend with RSI having been below 50 on the previous bar and closing at or above 50 now. The short signal combines a downtrend with RSI dropping back from above 50 to at or below it. When the long signal is true, the code calls trienter with an order type of buy at the ask price. When the short signal is true, it calls trienter with a sell at the bid. Inside trienter, the stop distance is the ATR multiplied by the stop multiplier, and the target distance is that stop distance multiplied by the reward ratio. The stop and take profit are then normalized, and finally a buy or sell call sends the order to the market with those levels attached. That's the entire decision, both sides, in a handful of lines. Let's bring the whole idea to life on a chart. On screen, you can see a candlestick sequence with two moving averages drawn over the price, the faster 21-period exponential moving average and the slower 50-period line. And below the price is a subpanel showing the relative strength index with its 50 midline marked. Look at the opening candles on the left. Price is stepping higher. The fast EMA is sitting above the slow EMA, and the slow line is tilting upward. That combination is exactly what the strategy calls an established uptrend. So from here, it is only interested in buying. It will ignore any sell ideas while the trend reads up. Now watch the next couple of candles pull back. Price eases lower, and in the subpanel, the RSI slides down through the 50 midline. This is the shallow momentum reset the strategy is waiting for, not a full reversal, just a pause where buyers step back for a moment. The EA does nothing yet. It simply notes that RSI has dropped below 50 while the larger trend is still pointing up. Then comes the signal candle. Price turns back up and closes higher, and in the panel below, the RSI climbs back and closes at or above the 50 midline. Because the trend still reads up and RSI has reclaimed 50 from below, the long condition is now met, and you can see the buy entry marker appear. The moment that bar closes, the EA measures the current ATR, multiplies it by the stop multiplier, and places its stop that distance below the entry. You can picture it resting just under the recent swing low. The take profit is then set at the stop distance multiplied by the reward ratio, a default of 1.8. So the target sits noticeably further away than the risk. Follow the candles that come next. Price presses on in the direction of the trend, one rising candle after another, until it reaches the take profit target and the trade closes for a gain in this illustration. Notice, too, that once price had traveled one full unit of risk in favor, the stop would have been lifted to the entry price, the break-even move that removes the initial risk from the trade. Now the picture changes. Price rolls over at the highs and begins to slide. The fast EMA crosses below the slow EMA, and the slow line starts tilting down. The strategy now reads an established downtrend, so it flips its bias. From here, it is only interested in selling. Watch the pullback against this new downtrend. Price bounces for a candle, and in the subpanel, the RSI pushes back up above the 50 midline. Again, that is the momentum pause the EA looks for, this time from the other side. It waits. The short signal candle then forms. Price turns back down and closes lower, and the RSI drops back to close at or below the 50 midline. With the trend reading down and RSI losing 50 from above, the short condition is met and the sell entry marker appears. The stop is placed an ATR-based distance above the entry, just above the small swing high, and the take profit is again set using the same 1.8 reward ratio, this time below the entry. From there, price continues lower with the trend, candle by candle, until it reaches the take profit target and the short trade closes in this example. Two trades, one long and one short, both taken only in the direction of the prevailing trend, and both prompted by the same simple idea. Momentum handing back through the 50 line and then resuming. That brings us to the end of our walkthrough of the RSI Midline Trend Continuation Expert Advisor. Today we covered how the strategy defines a trend with two EMAs, how it waits for the RSI to ease back through its 50 midline and then reclaim it, and how it manages every trade with an ATR-based stop, a reward multiple target, risk percent sizing, and an automatic move to break even. Remember that this video is educational information only and not financial advice, a recommendation, or a solicitation to trade. Trading carries risk, and losses are a normal part of it. If you found this breakdown helpful, please like the video, leave a comment with the strategy you'd like us to analyze next, and subscribe so you don't miss what's coming. You can find more of these breakdowns at algobot.live. Past performance does not guarantee future results. Trade responsibly.